Hi, this is Zach with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 10th of February. Starting off with the FTSE 100, which seems to be determined to go into fresh record territory. We're already at the top of that rising trend channel. The black one there from the end of 2023 and above 87.30, looking for 9,000 as soon as the end of next month, which is the proper top of that rising trend channel, given that the upper parallel is from last May. Interestingly enough, this year looks like it's another win for the adage of buying on bonfire night and selling on Valentine's Day. So I suppose the entry there around 8,200 and hopefully the exit 500 points plus above. That adage is my own one rather than anyone else's, but actually is a very good one. If you look back historically, you can see the year before, 23-24, we also had a reasonable move to the upside. On the downside, the worst we're expecting at the moment is now 8,600, which was the initial January resistance. The other point to note is the way that we've had 2/3 bounces for the RSI above neutral 50, in fact above neutral above 60, which is quite an achievement. So this does actually look strong, over and above the fact that we've got the 50 and 200-day lines both currently rising. Moving along to the DAX, and here, no need to gush quite so much on this one, but we have actually broken out into new higher territory. The steeper October rising trend channel there shown in red, 22,100. That's our target for the near term, at least this month, while we're above recent support around 21,000. Ideally, we stay above the top of the old rising trend channel, 21,300. Onto the Dow, and here obviously the same as it was yesterday, but just the risk now of a test of the 50-day line there, 43,700. We've had a triple or quadruple failure at 45,000, which is not a good look, and above that we were hoping for 46,700 at the top of that rising March trend channel, but I think we'll be lucky now if we can get away with a test of the 50-day line or rebound off that. RSI still above neutral, 50 at 54, so the game not over yet. If we do break down, then we got the floor of that channel, 42,400. Moving on to Bitcoin, and some signs of stability, but only in the area that you'd expect, which is the neckline support there, uptrend line there from the early part of November, 94,000. Above that, we've got resistance at the now rising 50-day line at just under 99,000, and an end-of-day close above that 50-day line. Should be enough to take us back to the highs, record highs around 109,000. But the key here is holding that uptrend line, and also, if you are a buyer of Bitcoin, buying on any dips towards that November line. Moving on to gold, and here it's been a stellar performance, helped along by the news of people hoarding gold, physical gold that is, and here looking for up to $3,000 an ounce by the end of this month, the way things are going, while we remain above late January resistance around 28.60. The worst we expect at the moment is 2,800. Moving on to the pound dollar, and here basically settling into a sell into strength towards the 50-day line. That's at $1.25, so maybe those jobbing this market would be doing that. Below that, the 122, 123 area looks to be the worst that we can expect at this stage, so rather stronger than maybe some were thinking, given the potential interest rate outlook. Moving on to Capai, the old Duke Mount, and here it's interesting that the start of the week sees maybe a change of emphasis, a positive change of emphasis. It looks like a bullish consolidation above old resistance around 0.04, above that. Looking for the shares to hit 0.06, and best case would be up to 0.1 pence by the end of next month, although I suppose it's difficult to work out what might do that. The other point, which is positive, is that we're just a day away from a golden cross between the 50 and 200-day moving averages. On to one of my best calls of the recent past, which is Eurasia. And here we had plenty of signs that the shares were going to go up. In fact, it took a while for this to happen. Basically, late December and then mid-January, we had the shares pushing through a rising 50-day line, and basically the breakout through the 3 pence area, the big giveaway on this one. Initial target here was 3.25. Second target, which was 4.5, and The final target, inverted commas, is up to 8 pence, although I suppose at that point, maybe the company might think it might be worth trying to get a bit of cash in the bank. But uptrend line in the RSI window, and certainly looking for up to 8 pence while we're above the 5 pence area, which is basically the resistance area of Friday. Moving along to Filtronic, which looks as though it could be the next big British success story. We certainly need them at the moment with the deal with SpaceX, and bouncing off RSI 50 twice in the recent past, ahead of the move to the upside today with a big order. A rising trend channel heading for £1.11, which was our initial target. Long-term target, or at least the target for next month, hopefully would be up to £1.30, which is a February 2024 resistance line projection. Upside valid certainly while we're above the floor of the gap there, around 95 pence. Probably that's the most one would like to see on a retracement. Ideally, we stay above £1, but that might be asking for a little too much. Moving on to Fiinu, which retraced rather more than one would have liked or wanted after the big spike on overdraft news. But here we have the shares bouncing well after the two strong candles that we had to start the month, opening at the low, closing at the high, and basically continued in that vein ever since. Above the floor of that rising trend channel, now at 8 3/4, looking for up to 18 or 19 pence. By the end of next month. If we're lucky, it would be by the end of this month. Gfinity, another win for the Bulletin board heroes, and there have been so many, it's actually getting boring. Here we've had the first target there around 0.03, second 0.08, and today we've just hit the latest target, 0.12, right on the nose, and looking for, I suppose, perhaps greater glories. That could come in the form of another upper parallel of the trend lines already drawn, so the upper parallel of the last one from October heading towards 0.2, which seems rather ridiculous, but it could be achieved by the end of next month if we hold above today's support at 0.1 pence. We've already had the golden cross for the shares back in December. Let's see if Gfinity can deliver the goods. Moving along to a stock which is also looking quite hopeful at the moment, and here we've got Inspec, the shares bouncing off the old resistance area around 46 pence, and while they're above that, we're looking for initially the 200-day line, or we were looking for the 200-day line at 54 pence, best case up to 65 pence by the end of next month, and you can see obviously the shares have just filled that gap from December. End of day close above 48.5 is what we're looking for as a gap close buy signal, and we also had bullish divergence going into the turnaround. Another stock which has been championed here well has been Ilika. Here we hit the 33 pence target, looking for 45 pence by the end of next month, and I suppose if we're lucky we might get that by the end of this month, especially given the way that both the 50 and 200-day lines are heading into a golden cross, which should be seen over the next week or two. Ideally, we stay above the old April resistance around the 31, 32 pence, but really like it will stay above 33 pence. On to Immupharma, which looks like it's completed its pullback, just trying to break that resistance line there at 5 pence. Above that on an end of day close basis. We're looking for up to 9.5 pence by the end of next month, which is the top of a rising trend channel from back in October. Ideally, whatever happens, we stay above 4 pence now for Immupharma. On to Mila or Mila. Here we've got the situation where the shares have tried to regroup, and basically what we want to see are end of day closes above the old December floor. They're at 0.25. The more of those we can notch up, the greater the chance of a move up to the 50-day line, just shy of 0.35. Oracle Power seems to be revitalizing itself at the moment, and here we've got a higher lows for the start of 2025, and what's nice here is that we're actually getting back above the old September support there, 0.015 above that. I suppose the obvious area would be to head up towards the high 20s, so 0.028, etc. Nice little push for the RSI through the neutral 50 level. The only problem here tends to be on the rallies, tends to be the risk of a fundraise. But this looks slightly better than the recent recoveries for the shares. On to a requested stock, which is Trellus, which has rather let the side down after the massive spike to 5 pence. Current situation has been fallen out of that triangle there at 2.5 pence, and testing recent support at around 1.95. I'd like to see the shares remain on the right side of 2 pence. Otherwise, there's the risk of heading down to the 50-day line at 1.5 pence. The positive that we've had of late has been the shares, or at least the 50 and 200-day lines crossing in a golden cross, just about 1.3 pence. So hopefully that will kick in to prevent any lasting pullback below the 2 pence area. On the upside, we would basically want to see the shares break the 3 pence area, which has been recent resistance. Finishing off with TAP, which seems to be on the front foot at the moment, as talked about yesterday. Shares were up 20% on Friday, opening at the low, closing at the high, and so far they have opened at the low and are on the high of the day, which is also recent major resistance around 3 3/4 pence. Above that, we're looking for 5 pence plus, 5.1 pence, hopefully by the end of next month. But the way things are going, we might even get that sooner rather than later. On the downside, hoping that we won't get anything now lower than the 50-day moving average at 2.5 pence. That's it for me today. More updates tomorrow.